Hi, Richard here on Tuesday the 12th of October. I'd start off with a standard look at the Dow. What we're seeing is no change. We've got this resistance still in place. We've got this trend line emerging, and we've got these doji type star activities, but the market is still gravitating to up. We hit 11,000, which was the nominated target. The question is now, in the event that we get a likely breakthrough here, then 11,200 would be certainly on the cards. So we'd need to see a significant candle pushing up through that in order to have that confidence, as well as a volume lift as well, which has been flat over the last number of weeks now. On the Aussie chart, it looks not much different either. This nominated target here, 47.67, has been in place for a long time now, and the 61.8 resistance has been met, spiked above, tested this equilateral channel line which was set based on the triangle, and we're just waiting for a confirmation on whether or not it's going to follow up with the Dow or in fact break down. But looking at the MACD, this is really important because we do have some divergence in here. That is, this point here is lower than the price action here. So this upward sloping price action and this downward sloping MACD often spells divergence, often spells the end of a particular move up, and also we can very clearly count 5 waves. The question is whether or not this fifth wave is complete, and we can measure that very broadly and say that 48.60 would be the next target, and you can see the double top high of, or rather should I say the April 26 high of 5,000 would be the next target in the event that we get that solid breakout. I wanted to spend some time on the Australian dollar. This is a weekly chart. There's not much on it, but it shows you where we're at the moment, and also shows you this this reticence to be able to push through the previous record high, which was that 98.46. Nevertheless, it has punched through it to 99, 100, only 900 pips away from parity. So it would be very unlikely that we're not going to make parity. The question is when, and I expect that really what's likely to occur is that this looks like an impulsive wave here, so therefore we're likely to get a very sharp retracement, which would come down and pull down to possibly this line here, which is about the 93 odd mark, before we made a lunge later this year for parity. And in the event that we did, if we put an extension on it, and we can measure this whole movement here, this wave 3, so we're talking 1, 2 and up for 3. This is the impulsive wave. This overlapping complex correction here, pulling back to set the support line, and the target would be above parity at 101.6, which we should see either one of two ways. In the very short term, in the event that we get a little pullback or no pullback and it just drives on up, that would be on very bullish news out of North America, or we get a very sharp retracement which pulls back to this support line, and then later this year heads north to this target, and one can't imagine it, but certainly there is another target above on a equilateral basis. So the length of this leg here measured on the pullback would give us a target of 1.14. Frankly, I just can't see that, but nevertheless that is a possibility. On the daily, which is the usual chart that we're looking at, we can see that this is pushed up in this third wave, which is the most impulsive. It looks like an ending diagonal. In other words, often when they do complete, we get sharp retracements back, but I just at the moment can't see it coming back to 88 unless some very, very bearish news comes out. But there's the high, 98.49 from 2008, and 101.6 was our next target in the event that we do get the extension of this. But again, pullback, support and off, but I've said that all the way through here, and we can see the only pullback that we had was this very sharp downward leg on the back of the RBA not changing interest rates. That's the cash rate was left at the same, and it pushed down very heavily and then sucked back up, and we've made this top here. It's having trouble getting through though. This is the euro, which is worth having a look at as well, because here's the fourth wave, previous high. These things often, as we've said before, trace back to the previous fourth wave. There's the channel line, and we've got some resistance here. Certainly these doji type activity on the candles would suggest that a correction is more or less underway, but to trade this we'd be looking for a cross here and a breakdown in order to go to the short side. But certainly 1.4 is a target. It's been an incredibly straight shot. And onto gold. Gold is continue on up. Certainly there's no cross happening down here on the stochastic. We've got support off this line that gives us the projection on these targets of 134.45. We've hit it. 130.80 is our next target, and just by the way it's acting, it certainly looks like it's pushing up. Light crude oil is that final chart, and indeed it's in no man's land at the moment. You could just about draw a trend line straight through here to suggest that, although that's pretty rough I have to say, but nevertheless does give you that support. Broke through that support. There's now resistance. Will it come back and test this line? Well, in the event that we get a higher indice on the Dow or the ASX 200, then certainly we'd be looking to test that. Alright, well that's it today. I think the big action is to watch what's happening on the Australian dollar, because that will in fact impact what's going to happen on gold. So let me restate that. In fact, we might be able to go to the US dollar index, if I can find a chart of that. Let me see if I can get this up quickly. This will be a weekly chart of the US dollar index, and you can see what's occurring here. And this has obviously got an Elliott wave count on it, but we've had these 5 waves down. Then we had the ABC retracement. That's a classic 3-wave retracement, and now we're pushing down in what looks to be an impulsive wave, but what appears to be a corrective wave. You found support off the moving average, pop back up, and then push down. So what's the target for this? Well, it is more or less likely to be right on the 74, 75 would be the extension of that target. We expected some support about 78.22, but nevertheless, because it's overlapping, it tells us that it's a corrective. It's in this 3-wave action, so we'd be looking for a breakout over the near future for a move back up to the upside, which of course would bring the Australian dollar down, gold down, the euro down in the event that that happens. But it's still, the major primary trend is down. The target of wave 3 is very close at hand now, at around that 77 mark. What we need to see is whether or not it's going to break out and push up. That will have a big impact, as I say, on the Australian dollar, on gold, and if that's occurring, then we're likely to see the indices coming down as well. Okay, for more, please go to themarketforecaster.com.au, and I look forward to talking to you again.